Welcome, everybody. This is Pup's Office Hours. It is August 31st. It is the last trading day in August. So we're going to have some really interesting monthly charts to look at in a bit. But we've had a nice 5-week rally. And the question is, the pullback that we're getting, does it continue? We'll dig into those charts in just a moment. So a bit about myself. My name is Danny Naz. I've been trading in this market for, well, the better part of 12 years, but full-time for the last few years. And this is my office hours. I hold this session every 2 weeks. It's usually about a 60 to 75-minute session. We review pretty much everything about the market. We'll do an overview. This particular session, we're going to do all of the trade alerts that went out for August. So we'll look at some of those names, what performed well, what didn't. And we'll also look at all of the indices as well as some sector ETFs that I like into the next couple of weeks. We'll also do a chart request and Q&A session at the end. And I do all of my charting on TrendSpider, and I do options flow and dark pool data on black box stocks. And for the AI and algo trading alerts, I use TradyTix. So for those of you who are not members, I do run an educational platform. Everything on the screen you see is included. That runs $129 a quarter, $479 for the year. And if you want extra attention, I also have an executive plan, which is basically everything on the previous screen. But this also includes access to my Fibonacci course, as well as 4 hours of coaching calls. So now that we've got those pleasantries out of the way, bear with me 1 second while I get my chart screen up. Okay. Perfect. Just let me know in the chat if you can see my chart that's up on the screen. I will get this ready here. Okay, so let's talk a little bit about the market before we go into any of these specific charts. Yeah, so I know we didn't have a session a couple of weeks ago. Unfortunately, I had a death in the family, and I was just spending time with my family. But our last session was about 4 weeks ago, and just about a week after or a week before that session, the market basically started to bounce. We had a pretty big bounce, I would say a 4 to 5 week bounce here, and now we're starting to see a bigger pullback. So really the question is, will the pullback continue? Is the bear market back on, or is this just a short-term pullback in a market that's looking to correct back to the upside? And I think, we won't answer that question today because, certainly I don't have a crystal ball, but what we can do is look at some of the relative strength that we've seen in the market during this pullback. And I think for me, that's my process. It's always looking at where the relative strength is, whether that's in SPY or in tech or in energy, is what we've been seeing in the last couple of weeks. But yeah, let's dig into some of these charts, and I think the charts really will tell the story. So yeah, I mean, we could see here, this is the Dow Jones Industrial Average, ticker DIA. We had a move up into the 618 retracement right here. That retracement was from this prior swing high. Let me see this right here. So from that swing high here to that swing low, 618 is always going to be the fib that I'm going to watch for a potential reversal. That's exactly what we got right there. You also see that we had a false breakout over the 200 simple moving average here in red. And it also wound up being an island reversal. Basically an island reversal, you get a gap up and then you get a gap down either the next day or a few days later. And this is exactly what we saw. Those tend to be good reversals. Look at this island reversal back here, right? It was a 2-day It gapped down right there. It gapped right back up right there, and it sent us higher. So, there were definitely signs that we can see on the chart. And, we're looking at DIA. We could look at SPY. We could look at the Qs. They generally all run together. So let's take a quick look now next at SPY. And I'm going to talk about this chart for a moment. But you could see, again, island reversal right here, island reversal right here. This island reversal sent us higher. This island reversal is sending us lower. But let's take a quick look at this. So what I wanted to do with this chart is kind of dissect it a little bit. Let me get a full screen on this so we get as much screen real estate as possible. Let me also take volume off because that's not going to matter. And let's take a quick look here. So, we had our move into the all-time highs here, and then we had a 14% drawdown. And then we had a nice ABC correction back up to a new lower high, right? Because you had that high, then you have a lower high, and then this one sent us down with another move. That was 17%. So that first move, 14%. Second move, 17%. Again, counter trend rally to the upside, another push down. That one was 12.76%. This one took a month and 3 weeks. This one took a month and 3 weeks. This one only took 2 weeks. What is this one going to do, right? Does this one retrace lower than that low? And, that it very well may retrace that low. But what I'm looking at the moment, let me clear the screen off real quick, is this 14%, 17%, 12%. You take the average is right at around 14, 15, well, 13, 14%. Actually, it looks like it was 12.6%. So if this top here signifies an average drawdown of 12.6%, that means SPY is going to come to 375. So right now, we're at the 50% retrace from that swing high to that swing low. That's 396. We closed at 395 today. The 618 retrace is going to be at 388. So if that doesn't hold, then I could say with pretty good certainty, we're probably going to come down to 375 at the very least. We have some nice support pretty much right down there, I think at around 373. If we lose that, then we're going to retest these lows here. So, we have to map out where the trade potentially could go. But listen, we can come down to the 618 here and start to reverse to the upside. And honestly, that would make a lot of sense, right? You have a wave one move right there, right? ABC correction, that's your wave two. 1, 2, 3, 4, 5, that's your wave three. You can have an ABC correction, maybe down to that 618, that's your wave four. And then you have another rally to the upside, and that's your wave five. So that can happen too. But right now we're in the middle. We just don't know. So we hit that swing low anchored VWAP, we lost it. We hit the 50 SMA on the daily, we lost it. So the market looks like it wants to continue to come down. And so we, as traders, we need to get out of its way, let it come down, and let's see where we bounce. So that's really what I'm looking for here on SPY. The other thing I think that's important to note, let me clear this off and get out of here. I'm going to add seasonality here from TrendSpider. This is a pretty cool tool. So if you look at seasonality over the last 30 years, this is the second weakest month of the year, is September for SPY. But 30 years is a long time, so let's just look at the last 10 years. I think that's probably more relevant than the last 30 years. So we'll go to August of 2012. Now we're looking at a 10-year span, and it's still the weakest month, or the second weakest month next to January, for the course of 10 years. So that just tells me that, be very careful in September. We need to, a couple of things, right? So we have Labor Day weekend coming up this weekend. So we're in a low volume week. I'm sure you've seen the intraday volatility. After Labor Day, everybody's back to the office, school's back in session for most of the US. I know some areas of the US have already started school. So it's back to business as usual. But what we need to be careful of is that continued weakness potentially in September. And so I think we'll see much better opportunities in October, because based on the way the market has been moving, my thesis is that we'll continue to come down a little more, maybe for another week or two. And then we'll start our rally back to the upside, potentially mid to end of September into November. And November, we have the midterm elections here in the US. And so I think, anytime there's these big elections, whether it's the midterm elections or the presidential elections, the party in power always wants the market to look good, because that's, a bad market going into elections is bad for re-election. So my thesis is that we continue to come down a little bit. The market will turn at some point, it'll bottom, and then we'll get another rally to the upside into November. And then from there, who knows, right? Depends on, who wins what election, how the market reacts to that. No one really knows. So, but that's the thesis that I'm going on based on what I'm seeing in the charts. All right. So let's look at the Qs. Again, very similar story. Looks like a potential wave 1, 2, ABC 2, right? 1, 2, 3, 4, 5, potential wave 3, ABC retracement, potential wave 5. So, again, but this could be wrong, right? This could just be a bigger wave A, B, and potential C, back down to the lows. Again, we need to let price dictate what the chart is actually going to tell us. But what we do know is from this move right here, from that high to that low, we hit the 618 almost to the button, and we pulled back. And now the 618 from this swing low to that swing high is right here at 296. So I want to see 296 hold if we come into it this week, maybe even next week. And that might be a good area to take a bounce trade off of. But again, we won't know until we get there. Similar to IWM, Island Reversal, we came right into that 50 SMA today and we stopped. 50% retrace at 182, 618 retrace at 177. This zone here would be the area I would watch for. You can see we're in a very clear downtrend. We broke out of that downtrend. This might be a back test and a bounce, right? Right at that 50, right at the 50%, right at the trend line. Potentially could see a bounce there. And so I'm definitely watching that this week. And then, of course, we always look at the dollar index. The dollar acts as an inverse of what the market is doing. And if we zoom out, it's probably a little better to go to a weekly chart. We zoom out, you can see the dollar on a relative basis is breaking out. So the dollar has been pretty strong. The euro has obviously been weak with all the energy issues that they've been having due to the war in Ukraine. The dollar is just remaining strong, and a strong dollar is bad for tech stocks and generally bad for the market. So as long as we have an elevated dollar, a strong dollar, I think the opportunity for the market to rally, it lessens. The minute we start to see weakness in the dollar, you'll watch and see the market continue to go up. So that's the general overview of the broader markets. Let's start looking at some of the individual sectors. So the first sector that I'm going to highlight here is KWEB. This is your Chinese tech names. Right, so it could be Tencent, Alibaba, Pinduoduo, Baidu, JD, and you could see we're consolidating in a wedge, a very large wedge for most of the year. And this wedge started to bottom in February and came to the top of the wedge here in June, back to the bottom of the wedge here in August, and now we're somewhere smack dab in the middle. We haven't tested that declining 200 simple moving average. And we're sitting right on top of that 50 simple moving average. But if you dig in deeper and you look at, PDD and BABA and JD, they're not that bad in terms of relative strength to the market right now. So the other thing I'm watching here is see this RSI breakout. We broke over the trend line and we broke and back tested 50. So Chinese tech stocks, I think should be one of the sectors that we continue to watch for the coming weeks. No surprises here, energy, right? XLE. So this is going to be ExxonMobil, Chevron, ConocoPhillips. I put a trade alert out on ConocoPhillips. We'll look at that chart in a little bit. But ExxonMobil, Chevron, the charts look very similar. I love for these to watch for these pattern setups. Here's a nice cup and handle breakout that sent us on this big move this year, right? Very big move on energy. Again, likely mostly due to the war in Ukraine and the energy crisis in Europe. And now that we are zooming in a little bit, let's throw that year-to-date anchored VWAP on. That's not going to make a difference. But you can see that, we had an ABC retracement here and now an ABC move potentially to the upside. We're hitting a 100% symmetry move from this 1-2 move, right? So basically the length of this one is the length of that. That's generally, what I look for as a target for a 1-2 move. We came right into that at 83.64, 3 days, and reversed off of it. So energy is starting to pull back. Again, very natural. When a stock moves up or when a chart moves up, it generally will pull back, right? So this one's moving up. So we're going to see, where do we pull back to? I think, 78.54 makes a lot of sense. That was the 2018 highs from way back here. So you see that resistance right off of that level, right? That's in 2018. And we busted through that here. We back tested it, it failed. And now we're back through it again. So I want to see this back test and hold. If we lose that, then I would be targeting either the 50 or the 200 simple moving average back here. And that's also right at the 50% and the 618 retrace of this move. So again, very logical level to watch for a pullback. The next sector is TAN. So this is your solar names: ENPH, Solar Edge, Sunrun, FSLR. FSLR actually had a really good 2-day run these last couple of weeks. So definitely a name that should be on your radar. CSIQ, that's Canadian Solar. We're going to take a look at that chart in a little bit. That's another one that looks pretty good. I've put that out a couple of times as well. So here's solar. So potential wave 1 up, ABC retracement. Here's a gap, right? We always see gaps in wave 3. So could this be potentially wave 1, 2 of wave 3? Very possible, right? Might get that back test on 382. We got that today. Maybe we get a back test on this trend line breakout. Maybe we get a back test on that 50 simple moving average. We have to observe and watch. But RSI is holding over 50. We have a TTM squeeze setting up. So solar names look pretty interesting here. All right, so those are the 3 sectors that honestly I'm really keeping a close eye on: Chinese tech, energy, and solar names. I will throw a 4th one out there: uranium. URA would be the name that you can look at. I think, let me double check. Yeah, we're going to look at that chart in a little bit. But that's pretty much sector-wise what I'm looking at for the next couple of weeks. Outside of that, you're going to have individual names. But before we go into some of the individual relative strength names, let's take a look at some of the trade alerts that went out for the month of August. So here's AEHR. Move these notes over so we can see the chart. But yeah, I mean, this one, let's see, the alert went out on 8/3. So I know on most of these charts, I put a line in where the alert went out. So let me get that in. So that's where the alert went out, right? And so we had a nice run right into that 618. Now I noted on the chart, targets on chart up to 1802. That's exactly where we hit. Look at all the resistance that we're seeing, and now we're reversing off of it. So when you take a trade like this, and you have to really pay attention to my notes, target's going to be to 1802. When we hit 1802, you have to make a decision. Do you hold the trade? Do you start taking profit? For me, I start taking profit. I start moving my stops up. But when I see a chart like this that continues to hit a level and pull back and bounce and pull back and bounce, I usually watch and I'll draw a trend line underneath these lows. And when these lows get broken, I stop out of my trade. I don't want this trade to come all the way back to my entry because, you're going to lose all your profit, right? I'd rather look to see if this comes back for a pullback, and then I could re-enter the trade on a bounce. And so that's what I think we should do here on AEHR. Target pullback zone is going to be that 50 to 618% retracement. That's going to be from this swing low right here to this swing high right here. That also coincides with our 200 SMA and our 50 SMA. So I think this is a really good area to watch for a pullback entry. It's basically going to come either back to our entry at 1372, or it's going to pull back somewhere in the $11 to $13 range. So keep close eye on this. It honestly, it's had a really big run, right? So from the low here to the high, it's 189% move in a month and 2 weeks. So anytime you get a stock that makes a move like that, you have to be careful. You need to make sure to keep a slightly tighter stop loss, and of course, take profit on the way up. Here's AMD. This one never triggered. Actually, it did trigger. My apologies. It did trigger right on earnings, and then it just ultimately failed. All this resistance into 100. It came right back down to that 618 today at 84.42, and that's where we are right now. I could say that semiconductors in general, your AMDs and your NVIDIAs of the world, are relatively weak compared to the market. So this is just a sector I am staying away from for now. Here's ARIS. This one, it actually triggered on earnings, but then ultimately failed right before or right after earnings. So I'm sorry, it triggered before earnings, but failed on earnings. And I don't generally like to take trades right before earnings. It's obviously very risky, and it's certainly a gamble. There might be instances where I will put out a trade alert where there is a stock that has earnings either that week or the next week, but I'll certainly note that, and I'll leave it up to you whether you want to take a trade or not. This one came back down to 1556, and it is holding there, and it's also holding this newly appearing 200 simple moving average. So it's one that I'm taking a pause on, but I'm going to have an alert set on that 50 simple moving average for a break above. I think this could be a nice gap fill play right there. Here's BTU. So you can see here, alert went out. We triggered, actually not the next day, but 2 days after the alert went out. We had a nice move up, very close to that 786 retrace at 29.94. My target was 33.34. We just didn't get there. We actually just back tested the entry, the trigger entry yesterday, and bounced today. So this is not bad, right? Because we took the entry and now we're bouncing back at the entry. So if we continue to bounce, that might be a place where we can add, but I would certainly start selling into the 618 and then certainly back at these highs right here. Here's CCJ. This trade alert went out on 8/25, so not too long ago, I think late last week. And this one's been moving really nice. We had that nice wedge breakout the day before. We had a spinning top and a pullback inside day the day after the trade alert, and that gave us a nice opportunity for a pullback, right? So I said hold over 26.23 or a back test bounce. We got that back test and the bounce. So 26.23 was a good entry. Got a beautiful move here on, what was that, Monday. Tuesday continuation, today inside day. So again, market pulled back the last couple of days, CCJ making new highs, and then inside day today. So relatively strong to the market. We came into the second price target here at 29.80, and we saw some resistance. So any break and hold over 29.80, I saw a lot of call flow for the 31Cs this week. So that would probably be my target, potentially price target for this week. Here's a CLH. This one went out on 8/1. This was a gap. It actually gapped up on the alert, and mixed candles the last two candles, but you throw an anchored VWAP on that, and we had a gap up on the 8th, and this just continued to run up. Nice little flag breakout, and now it looks like it wants to back test 115, which was our prior highs right here. So if we hold over 115, good to stay in this trade. If you fall back below 115, I would probably stop out or take a good amount of profit off. You could see RSI is falling, TTM squeeze momentum is falling. Still could be a good pullback and bounce, and we got that golden cross right here. But again, this one has run a good amount, and so we just want to be respectful of the run that it's made and respect the trade. Here's COP. This is one of the XLE stocks that I was mentioning. Trade alert went out on 8/19 for a daily close over 101.19. We got the same day trigger, inside day the next day, gap up on the 23rd. Nice continuation right up to the 786 at 114. We had a spinning top and then an inverted hammer at that level. And now we're starting to pull back. I want to see 106.59 hold. If not, we'll likely backtest that 101.19 entry. Here's Datadog. This one was looking pretty strong for a little bit, but like the rest of tech, it just reversed and came right back down. We did backtest 100 and bounce and came back to that 50 simple moving average, and it looks like it's holding. But ultimately, for me, this trade failed. I wanna get this over 114 for a longer entry, back up to 154. But at this moment, trade is off the table. Not a bad entry if we hold over 100, but I wouldn't be touching tech stocks just at the moment. I want to wait maybe another week or two and see if we start to bounce. Also have a nice daily squeeze setting up here. Here's DH, Definitive Health. Straight alert went out on 8/2, triggered the next day, but we had earnings 2 days later. It ultimately failed on earnings, and now we've been falling down. So possible inverse head and shoulders now setting up here. Want to see if we can reclaim $20 or $20.65. And then I would say that trigger at 26.58 would look like the neckline of that inverse head and shoulders. So trade is off the table for now, but certainly we'll revisit it if we get up to the trigger again. Here's EQT. This is EQT Corporation, cup and handle breakout. It did backtest, didn't close the gap, but it backtested the entry and then started to bounce. The target was 250. We hit that target for a few days. And I said, if we break 50, the next target will be up to 62. We did not break 50 on these entry or on these targets. And ultimately we pulled back and bounced at our original entry. So the trade is still valid. We just need to hold our trigger at 46.32 or 46.26, and then see if we can break 50.41. Here's Funko. This one never triggered. It failed ultimately at earnings and is just coming down off the table. Netflix did trigger through 230. It hit that first target at 251. Ultimately failed at that fib level, pulled right back, and it didn't close under our stop. We got a bounce right at our stop level yesterday, but again, this one looking more likely will test that 50 simple moving average. But if we hold 218, still good to stay in. Under 218, close the trade out. Here's ON Semiconductor Corp. This trade alert went out on 8/19. We got the breakout a couple of days later. It had a nice pop, ultimately failed the next day and failed at our trigger. You should have stopped out of this trade. Here's SHLS. This trade alert went out on 8/25. This is yet to trigger, but I really like this setup. It continues to show up on relative strength scans. So keep this one on your watch list. It still looks pretty good. Here's Shopify, never broke out. Now what I'm watching for, do we pull back to this $30 level? We actually pulled back to 30.50 yesterday. I was very tempted to take the trade there, but I'm going to be a little more patient. I want to see it come back down to these lows, and then I can use an even tighter stop and take the trade from there for a long entry. It just looks weak. It looks weaker than these previous pullbacks. So just want to be extra cautious on Shop, certainly on most of tech. Here's GFS. Actually, the Shop was the last trade alert for August. Now what I'm going to go into are some of the relative strength names that I am seeing at the moment that are setting up. No official alerts have gone out, but these are names that you will see show up on my morning emails as charts of interest or charts that I'm watching. It's not that I don't want to put a trade alert out on it, but I can't put out, 100 trade alerts a month. It would be impossible for me to manage. And I'm really looking for quality over quantity. However, I do want to spotlight stocks outside of a trade alert that still look relatively good. The bones of the trade are there. I will let you as the trader decide whether or not you want to take the trade or not. So the first of these newer names is going to be GFS. This is GlobalFoundries Inc. Beautiful flag set up here. You can see we broke this downtrend line on July 29th. We had earnings on August 9th. We ultimately had 2 inside days after earnings and then a nice pop, and now we're flagging. So I think for me, probably wait for that 618 break at 63.21. That will give us a break over the 618. It will also give us a break over the flag, and then you would target 70 and 79 to the upside. Here's MCK, put this alert out this morning. We actually got a break of that flag, but not a break over 368. So still a valid entry, but I want to see that daily close over 368. Looks good though. Here's TH. I had this initial, maybe I didn't put a note out on this, but I had this initially as an ascending triangle, but yesterday we broke down from that triangle. I mean, it still looks like a valid setup as long as we hold above, I would say above 12, maybe around 1223. We hold above 1223, you can take the breakout trade here at 1516 or a bounce at 1223. Here's RYTM, Rhythm Pharmaceuticals. Obviously, biotech, right? It's going to be a risky trade no matter what, but breakout, pennant, breakout, pennant. Does it continue? Do we get that breakout? Came right down to the bottom of the pennant, but I think over 2470, this looks pretty good for a trade up to 2982. If we can break that 618, 37.46 to the upside. You could see, there was your previous highs back there. But this one obviously running on news. I don't know what the news is, but from a relative strength perspective, looks really good. Here's MNTK. This originally was a trade alert that went out on 621. So let's find 621. That's right there. You could see 1421 was the trigger. It did not break out. It actually came right back down, but then it reversed right at prior support. Boom, nice move. And back through 1421, we got our real breakout. And now it looks like it's just forming a pennant right here. So it's setting up for potential, for another potential move higher here. So if we backtest 1671, good to take the trade up to $18. Or if we break above 1877, good to take this up to 20, possibly up to 21.39. Here's URA. This was what I was talking about earlier. This is a global uranium index. So CCJ is the biggest holdings. So that was one of the trade alerts that I put out. But you can see on a relative basis, this is breaking out of its wedge. Any of these names, you could dig into them deeper and look at their charts and see, what makes the most sense for you. I know UUUU is another name that people look at, but holding over nicely over this 200 simple moving average. If we hold and continue to hold over 200, 24, 26 would be my targets to the upside. And if we could break that 618, 28 and 31 back to the highs back in December. Next up is RS. This is Reliance Steel. Steel names were showing some interest a few days ago. They obviously gave back the gains that they've had over the last week, but still a valid setup, right? We had a wedge breakout, backtest bounce, backtest again, hold. 50, it's trading above the 50, it's trading above the 200. These are the types of trades that we look for, when stocks are under their key moving averages. To me, that's relative weakness. It's not necessarily a stock that I'm interested in taking a trade on. I'm just looking for that relative strength. This one still looks pretty good. Here's ACHC. We had a wedge breakout back here. And let's see, we've been struggling with this 1618 extension at 84.76. That's from that swing high to that swing low. I like it back over that level. You could watch for a back test of 80.15 or potentially that 50 simple moving average. But again, look at how far above we are, that 50. I could throw on the 21. That's where we're holding right now. Still relatively strong, right? Looks really good. Here's RRC. This is natural gas exploration and production, turning that 21 off. Trade alert went out back in June for 36.60. You could see we struggled with that level. We came right back to it last week and failed. Maybe we have a little bit of a cup and handle forming here. 36.60 still looks like a valid setup. I will keep it on watch. Here's CNP. This is CenterPoint Energy. Possible inverse head and shoulders here. The right shoulder looks like it might be forming. Maybe we come down to that 50 simple moving average. That would give us a little more symmetry with our left shoulder, right? There's your left shoulder right there. Maybe we come down, we bounce here. Again, just keeping it on watch. Not everything has to be a breakout trade. And these pullback trades tend to be pretty good as well. Let's also look from a Fibonacci retracement standpoint. Here's your 382 off your bigger swing. I think that looks like a pretty good area right at the 50. Let's look at the shorter swing right here. What is aligning right there? We got a 50% retrace on a 618, pretty much right there, right? So this zone right here, that might be the area to watch for a potential reversal for CNP. Got a few more. So if you guys and gals out there, if you have any chart requests or any questions, now is the time to drop them in the chat, and I will get to them after these next few charts. Here's Arch. Talked about this one back in February of this year. Had a really big run here from February all the way up to the top in May. Had a nice retracement back to that 200 simple moving average. We bounced off of it. Now we're back at that 50 simple moving average. Never came down to our entry. So this one is still a good one to hold. Although for me, I probably would have been out by the time we broke down on that trend line, like back here, maybe under 159 or under 150. Again, just how I trade. It doesn't necessarily mean that's how you should trade. Here's AR, Antero Resources. We had a couple of trade alerts go out on this. 2170, 2609. We're at $40. So this one's doing really well. So there's your 2179 or 70 entry. Here is your 2609 entry over here. And again, we retraced, still didn't retrace prior to our first two entries. And this one is just continuing to bounce. So nice retracement. Looks like it could have been a 5-wave move up, ABC retracement right there. And maybe we're starting a new run higher. I think, it makes a lot of sense. Energy is, it's not falling. Like it's pulling back, but it's not falling. And so we can see energy prices continue to rise. We're talking about, we're coming into the end of summer, beginning of fall, winter's around the corner, right? Game of Thrones, winter is coming. Okay. A lot of issues right now in Europe with gas and energy prices. I think that's going to put a strain on the global supply. That's going to cause energy prices to continue to rise. So that's why energy for me is going to be one of my top watches going into the end of the year. Last but not least, OXY, Oxy. Trade alert went out on 7/8. Let's get that tagged here. On a break and hold over 6308. For some reason, I can't. There we go. Extend it. There we go. 6308. Resistance, false breakout, gap over, right? Gap over, back test, bounce. 1, 2, 3. Are we in wave 4? Maybe wave 5 comes up to 86.41. I'm watching. I like Oxy. So yeah, I mean, those are the names. A lot of charts, right? I put out, maybe 20 or so, maybe about 15, 16 or so trade alerts in August. I try and do at least one a day, but with the market the way it's been, there hasn't been that much relative strength. I've been a little bit more picky in terms of the names that I'm putting out there. I think September will probably be around the same. It's probably going to be around 15 trade ideas, give or take. And I think October into the end of the year, I think we'll have a lot better opportunities on taking trades. But in September, I think, we just need to remain patient. I think patience is going to be the name of the game. So, all right, let's take a look at X. I know my buddy Steve has been asking me about X, so I do have this charted out. So, whoops, I'm going to just delete that. Let's just delete that for now. We don't need to see that anymore. So we had earnings back on July 28th. Let's see, from a retracement standpoint, we're struggling with the 200 and the 382 right there. Very possible. 1, 2, 3, 4, 5 with an A, B, C retracement. That did not draw out right. Let's do that again. A, B, C. So let's focus right here. So a couple of things. First, it looks like an inverse head and shoulders. Maybe this was a stunted right shoulder, but now that we've come up to this top here, this is looking a little more likely. That's your neckline, that's your right shoulder, that's your head. This potentially could be your right shoulder here. All right, we need to let this play out a little bit. So putting the inverse head and shoulder aside, if this is a 5-wave move up of a bigger wave 1, then I would expect an ABC retracement, right? And so what I would look for potentially would be a pullback to this zone right here. So maybe we're pulling back to the 50% retracement because your 50 SMA is right there, obviously rejected off of the 200. So 2133 would be the area that I would watch. The other thing I would do is I would do an extension off of wave B, and you could see how that aligns pretty well. That 1272 at 2133, 2125. I would say if we lose this level, this would be the last line of defense. 2017, 1987. You also get $20 psychological level as well. So I think 3 areas to potentially watch for a pullback entry. First area is here, right? Because you got your 382 and your prior low. Second area is here because you have a 50% retrace and a 1272 extension, and your last line of defense, $20. So that would be what I would watch for on X. All right, let's take a look at TEL. All right, I mean, it looks like I've charted this before, but it looks like an old chart. So there's our range. Looks like we broke out of that downtrend line here. We're back testing that 50. We bounced, we held over the 200. Keep in mind, this is a penny stock, so they tend not to really act well when it comes to TA. Sometimes they do, but this one just looks like it's trading in a range. Difficult to say where it could go. Looks like we've got some overhead resistance here at 483. right? You see resistance there, resistance here, resistance here. I think if you get over 483, you probably have a shot at 655. Let's just look at a weekly chart. Yeah, I mean, looks like it's all over the place. But yeah, this is your weekly trend right here. You can see we're still in the bottom half of the channel. So yeah, I mean, I think it's a tough trade. I think it looks a lot better over 654. I think over 654, you're going to get closer to that center channel. And then you might have a shot at, let's say 881, 1139, 1359, then back up to $18. But that's what I'm seeing here. It's, again, these penny stocks or stocks under, $10, certainly under $5, a lot more difficult to perform technical analysis on. But yeah, I mean, it doesn't look terrible. It just looks like it's been trading in a range for a little bit. So I'm not sure what you're looking for necessarily here. So any other questions or chart requests? All right, well, if there are no other chart requests or questions, I'm going to wrap up this session of office hours. It was great to be here with you all, especially those that are here live. And if you're catching the recording, if you do have any other chart requests or questions, just DM me on Twitter. That's always the easiest way to get me. But certainly appreciate you all, especially my members that have been with me. This market has not been easy to trade. But if we can learn to trade through a bear market, we're going to look so much better on the other side. Bear markets, the bears, eventually they have to go and hibernate. The bulls will return. I don't know where we are within this bear market. Technically, we're out of it, but, there are, inklings of a recession on the horizon. Interest rates are still going higher. The war in Ukraine is still going on. COVID and monkeypox are still being talked about. So there's a lot of headwinds in this market, but regardless of the headwinds, regardless of the bear market, there are always going to be relative strength names and true market leaders emerging. Those are the names that we're going to focus on. And I think, they'll be very tradable. Before I go, one last chart, I should have had this on. CELH, right? Got in at 67.68. This became a true market leader this year so far. Big move, right? I think we have a bigger move coming. So they're out there. They're not as many out there now than there were last year or 2 years ago, but they're going to be coming. They're slow, right? The bears are stomping on them right now. Eventually they'll turn around and they'll rise. But in the meantime, we're going to find the next CELH out there. So stay with me, be well, be safe in the markets. Keep in mind Labor Day weekend coming up this week. So holiday shortened week next week. It's going to be a low volume week this week, a lot of intraday volatility, as I'm sure you've seen already. So just be safe out there, be patient. We're going to see some better trades in September, certainly in October. Take care, everybody. Have a great evening. I will see you in the markets tomorrow.